Yeah. All right. So tonight, we are going to be starting from timing. See, the most important thing in price, the most important thing that you would ever come across whenever you're analyzing is time. It's always time before price. Timing is everything in the market, which means if you can actually time your price well, you can actually get a very precise entry. Everything in the market is programmed that, okay, when price is around this time, most of the time you should actually consolidate. And then when price gets to some time of the day, the real move will actually start. And most of the time, there are some things called the Killzones in different sessions. You know, we have different kind of sessions. We have the we have the London session, we have the New York session, and then we have the Asian session. In each of these sessions, we have some time in the market where we actually get like a good move, like when the real move actually starts. All right. So we are going to be talking about timing today, and then we're going to be talking about how important timing is in the market. It's always time first. It's timing you consider first. You consider time before you consider price, which means if price does something, probably price comes to your entry at some particular time of the day, you know, the time will tell you everything. Let's assume price is coming around this time. Price is actually coming to your entry. This is not a good time to trade. All right. So there are some things you consider first before you actually consider price. It's always time and price, not the other way. Not price, then time. Okay. The first thing you consider is time. You know, like I said, this is actually the critical part of the market. I'm actually starting the deep part of forex trading right now. So where it starts from is timing. Okay. Now I'm going to take you on a tour through charts, but I'm going to need somebody to unmute. Is EJ? If your background is not noisy, can you unmute yourself? AJ, is your background noisy? Welcome, Amicable. Okay, AJ is not here. So, Amicable, okay. Amicable, you can unmute yourself if you want to roll with me. Amicable, what's up? Okay, let me check the chat session. Okay, your background is noisy. All right, I'm just going to dive right into it. Now, Amicable, are you there? What's up?
Yeah, what's up, I did?
All right, all right. Yeah, I just need somebody to, so I would know I'm not talking to myself. All right.
Okay.
So basically, tonight I want to talk about timing. Basically, if this is the only thing you learn tonight, it's actually very, very, see, forget everything I've told you. Forget everything I've taught you before now. Those are just retail piece of shit, like retail method of trading. It works, yes, but this is actually, tonight we are starting the nitty-gritty of the market. So timing is the first thing that we are considering. Let's just read through some of those things. Timing and session plays an important role in the forex market. The forex market is a global market that operates 24 hours a day. And you see, one thing about these 24 hours is that there's some time in that 24 hours that market actually moves. And market opens 5 days a week, which means there are some days that you are going to get real move. That is, some days are going to be choppy, that is consolidating, while some days are gonna, you are gonna have good moves. So you consider time first before price. So before I actually go too far, let me share another screen. I want to share you some of the screen. Please acknowledge if you can see my screen, like my chat screen. Can you see the screen chat? Just drop it on chat if you can see it. All right. Yeah. So, all right. So basically, number one, let's consider last week's trading. You guys should be able to see this very well. Like what's it called? The day of the week. It's an indicator that I put just to show me that, okay, this is the day that we have during in the week, okay? This is Monday of that day. This is Tuesday of the same week. That was last week. This is Wednesday. And then we have what? We have Thursday and Friday. Can you see? So you see, there's something I want us to actually check. In each day, we want to see when the eye of the day forms. And then, probably the low of the day, but the eye of the day or the low of the day means where the move, the real move actually begins. Okay? Now, let's go to the Monday of that trading day. Just pay attention to everything that I'm going to show you. Number one, this is the Asian session. This yellow box is showing the Asian session. The blue box is showing the London session. And then the red box is showing the New York session. All right. So on Monday, personally, I don't trade the London session. I believe the London session is going to be the London session's eye. Most of the time, we actually be the liquidity for the real move, which was like that these days. The London session was just choppy. And then by New York session, price captured liquidity of that. That is the liquidity sitting above what? The London session's eye. All right. Like I told you yesterday about liquidity. What is sitting below, above an eye? Whatever is above an eye is called buy stop, which is what is needed to actually instigate the sales. Okay. So basically, like let's say you are trading, let's say you wake up around 8 a.m. and then market is just doing like this. After this first week of structure, you'll be tempted to enter the market here. Most of people have, sold here, right here on this candle, if they don't know the element of time. Do you get? And then once they sell at this candle, where are they likely to put their stop loss? They put their stop loss above this place, that is above London's eye. All right. And then what else? People, once another break of structure happens, some people believe it will keep going up since market has already broken structure to the upside. So those people will actually buy. Do you understand what I'm trying to say? So once they buy, you see all those buy position and then the seller stop loss right here is everything you need to, is all the buy side liquidity you need, the market needs to actually do all this sell. But we are going to go in depth on that later. Personally, I don't want to talk about liquidity today. I just want to tell you about time. So now, I just want you to keep it in mind. Like the move of this day, this real move that happened, this sell. When did it happen? It's most of the move will always happen within this box. This particular box is called the Q zone. That is, I will use GMT plus 1, the Nigerian time. The Q zone starts from 1 p.m. to what? To 3 p.m. to 4 p.m. Why this one is the London close? Some move actually happens there too. That's if nothing happens during the New York session or the London session. Okay, nothing happens during the London session, but something better like this move happened during the New York session, then we can ignore the London close. But let's say the London session was choppy or consolidating, and then the New York session was consolidating, then we can expect the London close to actually what? To actually, give us some good move, okay? So basically, let's talk about the London session. The London session opens by 8 a.m. Nigeria time, 8 in the morning. The Q zone, I'm talking about the Q zone, but the London open. Whenever I'm actually analyzing, I always talk about the LO. The LO is actually the London open, where the London actually opens from, where the London starts from, which is always 8 o'clock. I don't trade before that time, and I only trade after that time. And anything that, like if I've not seen any trade till 11 o'clock, I don't trade again until New York open, which is 1 p.m. Now, what have you learned? London session opens by what time? 8 a.m. GMT plus 1. And then does not close, but the Q zone closes where? That is, the Q zone means you can only look for entry. That is, you can only look to trade within that frame of time. That is, you can only look to enter a trade between 8 a.m. and 11 a.m. Anything after 11 a.m., you wait until New York open. Okay? There are exceptions, but most of the time, this is what we are going to go over different examples, but I want you guys to understand timing right now. I'm starting from timing Then I'm gonna build up on it. All right. If you guys have any question, you can just drop it on chat. Okay. So basically, timing. Timing in the sense that there are some times in the market, the market starts moving. It will not move until until that particular time of the day. Which means if the market is consolidating, the real move will actually begin at some particular time of the day. So those are the times, we call them Killzones. Those are the times we actually want to consider this evening. All right. But basically, the first thing I want you to keep in mind is that London opens when? Around 8 o'clock. And then New York opens. I only trade two sessions, London and New York. New York opens around 1 p.m. GMT plus 1. Nigerian time. That's that. GMT plus 1. So we'll be talking about the 8 a.m. Anything from 8 a.m. to what? 11 a.m. And then anything from 1 p.m. to what? To 4 p.m. That's all we're talking. We'll only consider the next blue zone, that is London close. That is, this is around the time that London close, the London close Q zone. Only if nothing happens during what? London session and then New York session. Do you guys understand? The blue box is what? Is the London session. This is the Q zone. This is where I look for, like this time frame. Not time frame, that is this time range. That is from 8 a.m. in the morning to 11 a.m. If nothing happens, I'm not trading again. I wait till when? Till New York. That is 1 p.m. to what? 4 p.m. All right. So this box just delineates what? London session. And then the other box, that is, which is the red box, delineates what? The New York session. All right. On this particular day, which was the Monday of last week, when did this real move start? It started at what? New York Open. And when is New York Open? 1 p.m. Okay. Can you see? The real move actually started inside what? Inside the zone. That is inside this time frame. From what? 1 p.m. to what? 4 p.m. If you understand, drop your favorite emoji on the chat, in the chat session, all right? So let's go to Tuesday. This is the Tuesday of the same week. Titilayo, you don't understand. What we are trying to say right here is that there are some time of the day that the market starts to move. That is, that you can expect big move in the market. All right? There are some times of the day that you can expect big move in the market. Now, let me show you something. You see, this is Monday's trading session. That is, Monday opens here, that is right here to this place. Then after this place, Tuesday starts. Speaking of Monday, you know, this is 24 hours time frame. We are on the 15 minutes chart right now. There are some time of the day, you know, we have morning till evening. There are some time of the day that the market will actually start giving you the big moves. So in that time of the day, there are different sessions. Number one, we have the London session, which is delineated by what? By this blue zone. And then we have the New York session, which is delineated by what? By this red zone. That's the New York session. So what I'm trying to say in essence is that the big moves will always fall into one of the two. Is either it falls around London session, that is London Q zone, or it falls or starts around what? The New York session. That is, don't forget, like I said, clear your mind of everything that I've taught you. All those retail trading method, 5/5, clear your mind. Open your mind to new possibilities. Open your mind to new stuff right now. Like, forget everything that I've taught you. Open your mind. This is a very new strategy. This is TA2. This is not TA1. TA1 is just for beginners. Like, it's for retail traders. TA2 is actually the nitty-gritty of the market, what I actually want to explain to you guys. So you guys should actually understand now. Like, I'm starting from the basic. Remember, I started TA1. TA1 started from candlestick pattern, then we go to market structure, then we go to support and resistance, then we go to trend line. You know, we kept on building on it. We started from candlestick. At first, it didn't make sense. Then after a while, it made sense. Okay. Then right here too, we are starting from timing. Then as I build on it, it will start to make sense. All right. So timing now, there's some time of the day that you actually time the market. That is, I want to enter my trade around this time of the day. Okay. So basically, we have the London session. The London session opens by 8 a.m. Anytime in the morning at 8 clocks. London session has started. So you can be expecting some move. If nothing happened, that is, if you don't find any trade during London session, till 11 a.m., you don't have to trade anymore. You just have to wait again till 1 p.m. 1 p.m., what's happening by 1 p.m.? 1 p.m. means in the afternoon, means New York session will open. Although right now there's daylight saving, and then New York session starts by 2. But let's come to the normal one that New York session starts from 1 p.m. Do you understand? So around this time of that day on Monday, this is 1 p.m. Can you see that at 1 p.m. the sale starts? Can you see all these tests started around 1 p.m.? Check the time. The time is actually below. You can check the time in here. This is the candle of the what? So this is New York Open, which is 1 p.m. Can you see when the sale started? It started around 1 p.m. That is essentially what I'm saying in essence. So we want to investigate some things. Like, look at this particular Tuesday. You see the big moves. When did they start? Every of the big move. Look at this buy. Let's assume you are buying here. The big move starts when? Inside the what? The London session. Remember, I told you this yellow one is what? The Asian session. This blue one is the what? The London session. And then this particular red one is the New York session. This one is the London close. They are just sessions. I taught you in the beginner's class that there are sessions that we trade. We trade different sessions. But basically, I trade only 2 sessions, which is the London session or the New York session. If nothing happens during the London or the New York session, then I can actually start considering trading, what's it called? Trading the London close, which is basically probably during FOMC that, it happens around 7 p.m. That is the data will be released, but we'll talk about that fundamentals later. There's somebody that will teach that. But basically, what I'm trying to say is that on this Tuesday, last week Tuesday, how do I differentiate them? There is nothing to, like, it's just time of the day that I differentiate. Like, I'm just trying to mark out the time of the day. Okay, I can use any line to differentiate them, or I can just put anything to delineate them. Can you see this is 8 a.m.? If I put an horizontal line here, can you see the yellow horizontal line? This was December 5, 8 a.m. Can you see it? 8 a.m.
Yes, I can see it.
I can use anything to delineate it. The reason why I'm marking the 8 a.m. means London session starts around that time, which means anything be like before 8 a.m., I'm not trading. I'm waiting for market to start moving by 8 a.m. before I trade. Do you understand? Then, if nothing happens till 11 o'clock, then I'm not trading anymore. I will wait for what? 1 p.m. Let me make it another color though. 1 p.m., which is, I want to make it another color. Let's make it blue. All right. So basically, we are just talking about the time of the day. We want to think of this as an experiment. We want to experiment the time of the day that real move actually happens. That move, like we need a range of time that this time I can expect something to happen. Do you understand?
Yeah.
So now let's check Monday again. Can you see this? When did this move start? This particular move down. Where is the starting point? What time did it start that day?
1 p.m.
1 p.m. Keep that in your mind, okay? Keep that. You see that 1 p.m. is the New York, like I told you, New York session starts when? New York opens by 1 p.m., right?
Yeah.
Nigerian time. So now let's go to the second day, which is Tuesday of that day. Now this is what? London session. This particular sale starts when? During London open, that is 8 a.m. Starts like the big sale, started 8 a.m. Even this move started within the range. I gave you a range of time that for London session, if you want to trade the London session, only look for entry when? Between 8 a.m. to 11 a.m. Do you understand? So now,
Yes,
can you see that even, let's say you miss these sales, even if you're looking for a buy, simply because it's actually within this time zone, that is, it's still between 8 and 11. This is 8:45. Can you see this particular move up started around 8:45? The only time you don't trade again is anything after 11 a.m. Then you have to wait for what? 1 p.m. 1 p.m. is when New York session starts. So you can expect to actually trade during this 1 p.m. to 4 p.m. Do you get? If nothing now happens, then you can expect to use the London close. I only trade 3 sessions. Number 1 is what? The London. London starts by 8. my own personal London Killzone, when I trade, starts by 8, ends by 11. Anything from 11, I leave screen, and then I come back by 1 p.m., which is the start of the New York session, and then I end by 4. If nothing still happens, then I wait from that 4 to like 6. If nothing happens, then there's no trading for me that day. But every day, I'm always expecting to trade within those time frame, which is 8 a.m. to what? To 11 a.m. or 1 p.m. to what? To 4 p.m. or 4 p.m. to what? To 6 p.m. Do you understand? Do you guys?
Yes, sir.
Right. So basically, timing is very important. You consider time first before you even consider anything price. Do you get? Now, let's think of this as an experiment. Now, we want to, we want to check the time of the day where most move actually happen, the time range. Do you get? Now, the eye of the day here was from during London close around 4 p.m. That 4 p.m. that I told you that if nothing really happens during London and New York, you can actually expect something to happen during what? During the London close. Now, let me go to the Wednesday of that day. Can you see the Wednesday of that day? Look at the eye of the week. Oh, sorry, the eye of that day was here, actually, during the session. But the real move, all this move, started around London session. Can you see? Within that zone, 8 a.m. opens here. Let me mark out 8 a.m. for you. 8 a.m. opens here. Then that 11 closes here. Hold on. Stay in drawing mode. All right. So London session. So I can be expecting, let's assume I take a sell around this place, around this time, it's actually valid. Do you get? Or let's assume after this break of structure, around this support area, I'm taking sell around, this is, what's it called? This particular day, this is beginning of what? This is the beginning of this 1 p.m. Let me make it red. Is the beginning of what? Is the beginning of New York session. So I can't take trade within this. You see, let me mark it red for you guys. Within this area, I don't like to take trades there. Why? Because it's not my own personal preference. I would rather wait till 1 p.m. than wait for price to actually correct before I enter my trade. What I'm trying to say in essence is that there are some time in the day that you need to anticipate when market will come to your entry, where you'll be trading. Do you understand? So this particular day, we can trade the New York session because after price created this, I didn't break it. So most of that move, this particular move down, started when? This particular area. That was 245. It's still within the 1 to 4 range of time that we have. Do you get? Do you guys understand? So let's go to the next day. Do you guys understand before I continue? If you have any question, you can drop it on chat or unmute yourself before I continue. SK, welcome. AJ, are you there? And Cecilia, do you understand?
Yes, sir.
All right. So basically, there are some time of the what we are trying to say in essence is that there are some times of the day that we actually expect big moves to start happening. Like around this time, probably you'll be sleeping because this is 3 a.m., 4 a.m., 5 a.m. But the real move, when you should actually expect big moves to start, is let's assume like this now. Let's assume the market is going to buy this day, and then you just waited till 8 a.m. and then you click on buy. Do you get? Would you make profits? Yes, of course, you make profits with little drawdown. Do you get what I'm trying to say? 8 a.m. This is 8 a.m. of that day. 8 a.m. starts here. Do you get? This is 8 a.m. of that day. So after price opens by 8 a.m. London session, you can be looking for your good entry. If nothing happens by London session, you can expect something to happen in this area of time, that is New York sessions, 1 p.m. towards 4 p.m. What I'm trying to say in essence is that you consider time. Timing is very important for all your trades, which means if you are like around this time, around evening time, if you're actually selling or buying, that trade is actually of low probability. Do you get? Anything beyond, unless there is FOMC like news that comes out in the evening, anything beyond 6 p.m., it's actually not a good time to trade. Sometimes it's a good time to trade, but most of the time, it's not a good time to trade. Do you get? So there are some time of the trade that you consider. All right. So now I want to go back like I want to go back far, like go back in time. Then we will look at details of, when price actually moved. Sorry guys, it's just the network. Okay. All right. I'm just gonna use this area of price action. Yeah, basically. All right. I think we should use this. Let me start from here and then let me go to 30 minutes. So you guys can actually get a bigger view of it. But if at any time you guys don't understand whatever I'm saying, you can call my attention back to what? Back to the matter. So basically what I want to explain to you tonight is timing. I want to show you the importance of timing in any of the trade that you want to take. So let's start from the beginning of November. I'm going back to November 1. November 1. So once we get to November 1, we backtest November 1 to the future. Do you get? And then we try to see what's up. All right. This is November 1. So we can start here right now. Let's start on the 2nd of November. Now, the first thing I want you to understand is that anything from this place, you see all these partitions that you see in my charts is just the beginning of a new day. Do you get? If I want it off, all I have to do is just go to settings and then, I go to events and then session breaks. It will go off. All session break means is just the time of the day, like opening of the day and the close of the day. Do you get? That means a new day opens here, another new day opens here. Do you get? This is the end of what? November 1. This is the start of what? November 2. All right. So it's just the session break, that is the beginning of a new day. So anytime you see this one to anything in the middle of this to this is 24 hours, it means a day. So now inside that day, each day we want to backtest each day and then want to see around the time when when the real move actually happened that day. Number one, I want you to write this down. If you can write it down. Number one, during London session, if you are expecting to trade the London session, you should actually take your trade within this time, which is 8 a.m. to 11 a.m. Anything beyond 11 a.m., wait for New York sessions to start. And then like the Q zone of London session is 8 a.m. to 11 a.m. And then the Q zone of New York session is what? 1 p.m. to 4 p.m. Which means any big move you're expecting during the day should actually happen within this time range. That is, if the big move starts during London, it will not start around 7. It will start by 8 what? It will start within 8 to 11. Now look at this place. Can you see this move up? When did it start? It will always be within this Q zone. That is within 8 a.m. to 11 a.m. Can you see that the bottom of this day started around this blue zone? What my blue zone is indicating is just London session. That is the London Q zone, 8 a.m. to 11 a.m. Which means I can only trade. Let's say I'm looking for buy that day. I should actually look for buy within this Q zone, not outside of it. Do you understand? And then when did this start? Inside the New York Q zone, which is 1 p.m. It should actually start. I've already made a mistake with these settings. I've messed with it. But I will set it again. But what I'm trying to say in essence is that you start with let me change it. Not 12. Should start around 1 p.m. 13 to 4. All right, it should adjust itself now. All right, it has adjusted itself. 13 to 4. Sorry. All right, let's drop that one for now. But it should start around 1 p.m., which is not 1:30, 13 o'clock. I'm going to reset it. I'm going to reset it later, but basically 1 p.m. to what? 1 p.m. to 4 p.m. That's the setting I want to put. All the blue line, all what this blue and red line, all these red boxes are indicating is just that stuff. It's just trying to tell me about the time of the day that we are in. Sorry, I didn't set it well. This is 1, and then 16, 4 p.m. All right, I think it should correct itself now. So yeah, 1 p.m. to what? 4 p.m. It has adjusted itself again. I'm going to adjust it later, basically. So let's continue. 1 p.m. to what? 4 p.m. All right. Any big move that you want to see during the day, we actually start around this time. Now let's look at November 3. That is right here on that Friday. Do you see this move up started somewhere around some time? Which time did it start? It starts when? 9:30, which is still within the what? The London Q zone. The London Q zone is what? 8 to what? 8 to 11. When did this market reverse and start moving up? It started around what? This Q zone area, that is this range of time, which means anything, even if the market is trying to go up right here and then you buy, it's a bad timing for you, which is 5:30 a.m. or 6 a.m. You wait for 8 a.m. to clock, and then you look for some price action that you want to see, which I'm going to teach you about more about that later. And then inside this Q zone means time. That is the time range that we want price to actually do some stuff, start moving. Okay. Can you see that the move of those days started around when? Around the London Q zone, which is what? This candle started it, which is a 9:30 candle. All right. So let's go to the next week of that particular day, which is a Monday. I don't really trade Monday, but basically, this particular move up started around London, and then this particular move down. This is the odd 2 p.m. again. This is the odd part of the. Hold on a minute. All right. This is the odd part of, like, this is an exception when the move started around 12:30 and didn't wait till 1. Do you get? But personally, I wouldn't have traded this, like just entered the market around this time. But let's check more example. Can you see this particular move? Started this particular move down, like this eye of this particular swing was around some time. What time was it? Around the London Q zone. Do you guys understand? I'm trying to show you what's important. Like, this is what you're going to backtest whenever you start backtesting. The time when the real move started around that day, during that day. Do you get? Can you see this swing was around what? 9:30 again. You know, this was 9:30. This particular one was around 9:30. See, hold on. This particular move was around 9:30. 9:30 started around 9:30, and then this particular one again, this particular sell started around what? 9:30. Now let's go to the next day. The next day, this particular sell started around what? 8 o'clock. Then, but this particular move up started around what? 10:30. 30 minutes before, when we don't look for any trade again. And then we wait for what? We wait for New York session, which is this red line. Do you get this particular move? That is this bottom, that is this swing point. Like, let's say you are reading higher highs and lower low, but I'm not talking higher highs and lower low. I'm talking about swing points now. This particular swing, market has been correcting. Even though it started correcting, yes, we don't actually, even if it corrects to a place where we like it, we don't take a trade until 1 p.m. That's if market is in our zone at 1 p.m. If it is not yet in our zone, then we wait for market to come to our zone. As long as it is in that, like, that time frame, that is that Q zone. So this is 1 p.m. This is 2. I should adjust this thing, but this is 1 p.m. Then you wait for price to come to you before you take price. But then the stuff started around, like, the swing points started around all these Q zones. Do you guys understand? Let's go to the next step. Hold on a minute. I'm going to reset this thing. If it does not work, then I'm just going to have to ignore it for the rest of today. But you guys should keep that time in mind. Hold on a minute. I'm trying to set something. Okay. It's not adjusting. All right. You guys just be a little patient. New York Killzone 13 o'clock to 15 o'clock. It's actually correct. But the time is just kind of off. All right, let's just continue. Basically, what I'm trying to talk about is timing. The timing. Now, what time of the day does this move start? The move started around 10 a.m. That is, even this buy started inside the what? Inside our Q zone. That is within the range of 8 a.m. to what? 11 a.m. That's London. All right. So basically, what I'm trying to establish before I go back to this slide is that there are some time of the day where you can expect real move to start. Let's look for more example. Like right here, when this whole move started down, it started around what? 8:30, which is still within the blue zone. And then this particular sales to started around the New York session. Any red box you see is just telling you about the New York Q zone. Let's check more. When the move started, it is this particular move up started around what? This Q zone. That is the New York Q zone. I'm going to like type out the charts, like the timing of everything, okay? But basically, I just want you guys to understand the time frame. All right. So basically, this particular move up started when? Started, price waited, consolidated and waited for price to come inside for just 1 a.m. Although this particular time corresponds with time when they renews news. But I'm just trying to tell you that price will actually wait for some time before it starts pricing, before it starts moving in any direction it wants to move. So it's still within what? We only look for trade within this Q zone. That is, this is the New York Q zone, which means it's either I'm trading what? I'm trading the London. If nothing happens during the London, what do? I wait till what? Till New York Q zone. More example, this particular move started exactly at London Open, which is 8 a.m. And then it gave us another entry around what? New York. Do you get around New York? This particular session. Let's go. Okay, I think the reason why it's around 2 o'clock is there is daylight saving currently. Daylight saving means around this time of the year, during the winter, like New York does not open until like 2 p.m. Normally it should be 1 p.m., but New York session does not open until like 2 p.m. That's the reason why most of the datas now will actually be around 2 o'clock or 2:30. It won't be around 1:30 or 1 like of before. Basically, I think that's the reason why it is trying to adjust itself. So basically, right here, London session, this particular swing point, when did they start? Started inside the Q zone. What's the Q zone for London? 8 a.m. to what? 11 a.m. Can you see? Started within that range of time. Then if you are looking for correction, this particular move corrected, yes, but it didn't start moving until New York Open. Because of daylight saving 2 p.m. now. Can you see? It didn't start moving until that 2 a.m. So if you are entering the market around this time, you can be expecting, I don't know your strategy probably, but this time is of low probability. There's some time of the day that we wait for. We consider timing first before we consider price. Let's look at this day. This was the low of that day. That Friday, this was the low of that day. When did it form? It formed around what? Formed around London Q zone. Okay? What I'm trying to say, I'm just trying to talk about timing. Timing is the first thing you consider before you trade. You wait for some time before you start looking for some stuff in the market. You don't just trade anytime. You wait for some time. Watch the market you're trying to trade. The reason why this market is not active during London session is because of London and New York, is because this is a British pound, and this British pound is for London session. It will be more active during the London session, and then the US dollar, because these two pair, because of these two pair, there are two pairs here, which one of them is a London session pair and one of them is a New York session pair. It means price will be active during that time of the day, most of the time. And then most of the time it will be consolidating within the Asian session. Do you get? So basically, let's look for more examples before I go back to the chart. This particular move up that day started when? Started around 8:30. All right. And then the sales too started around 8:30. The price consolidated and waited for New York Q zone before it started pricing up again. Do you have any question before I continue? AJ, SK, do you have any question before I continue? Oh, no. What about AJ? All right, let's continue. So timing is the first thing, like in this TA2, the timing is what we consider. The first thing that we consider is time. It's very, very important. There are some times you should not be trading. There are some times you actually wait for. Those times we call them the Q zone. Okay. And then the Q zone for London starts from what? 8 a.m. to what? 11 a.m. You should actually, any break of structure you want to look for, I don't know, whatever strategy you're using, even if you are using support and resistance, expect price to approach this particular zone during those Q zone before you actually take your trade. Anything above or beyond that zone, don't, like a zone of time, I'm talking about the range of time, don't try to look for entry on price or don't try to force any trade. That's what I'm saying, basically. Okay. All right. Let's continue. Now, example one, we're talking about market session now. We want to look at when this particular, all these big move of the day started. Do you get? So New York session starts from 12 p.m. to 3 p.m. All right. 12 p.m. as in, this is in GMT, not GMT plus one. Should be 1 p.m. to 4 p.m. if it was GMT plus one. All right. So basically, if you are checking this thing, all the big move is just within this particular time frame. As it started within one. Even this next day, around 12:45, just 15 minutes before New York open. Can you see this particular move down? The start of it started around 12:15. That's in GMT. I think that's what they are talking about. So basically, they are just, all I'm considering here is just timing, not support and resistance, nothing. I'm just trying to look at the time when the market was moving. Here was 2 p.m. Still fall around the New York Q zone. Here was 1:30 p.m. Still falls around the New York Q zone. Here was also 1:30 p.m., which falls around the New York Q zone, which means there are some time you should actually be expecting some move. That is what I'm trying to say in essence. I just want you guys to understand that. That's the reason why I'm repeating myself, because time is more important than price. Okay, time is the first thing you consider before you start considering price, whether break of structure, whether market structure, whether capture of liquidity. There's some time of the day where market should actually do that. All right. Now, example of London timing. This is another example for London session. Markets has been consolidating in Asia. Can you see this was Asian move? But nothing happened until London session around 9:45, which is within what? The London Q zone. Can you see? This particular zone will be 8 a.m. This one will be 11 a.m. Inside this box, we should actually be looking for our trade, because we can be anticipating that, okay, market starts to move around this time of the day. Then it starts to move around what? 9:45. Also, this one around 9:15. This next day, around 9:15, market starts to move. It's still within the Q zone. The Q zone is 8 a.m. to what? To 11 a.m. Nigerian time, GMT plus one. So this was 9:15 that day. This particular move started when? 9:45. This particular move started when? 9:15, which is still around our Q zone where we actually look to enter. That's basically what I'm trying to explain in this particular slide. So basically, here is another case study. Okay, for GBP USD, can you see this particular sales? You know, when is London open? London open is 8 a.m. Nigerian time. All right. Can you see that the move waited until London open, that is around 8:15, before market starts pricing down? The move started when? It originated from here, started around London. So when I say, okay, I'm waiting for London open or London open before I take any trade, it means I'm waiting for 8 a.m. to just clock, and then I want to start looking for price to do something. Do you understand that? Do you guys understand everything I've been saying since morning? AG and SK. Do you guys understand that? Yeah, I'm going to build more on this. Very well. I'm going to build more on timing, I promise. But I don't want to overclock your brain and give you a lot of information overload. I just want to give you simple stuff that I want you to check out, that I want you to backtest. Actually, besides, it was only AJ that submitted the assignment on liquidity capture yesterday, which I don't know about others. I didn't see any other assignment. I checked on AJ. AJ did a very good job. Okay. The reason why you do this assignment is just to actually, there will be a point in time, where I told you we're going. We are going to a point where we analyze together. You guys know what I mean. And then we use it to analyze, and then you guys even get better than I expect, probably than me. You get what I'm trying to say? So that's the point that we are trying to go. All right. So you guys should actually do the assignment. The assignment I'm gonna give you today is just go back into the charts. Insert your session break. Session break means day break. That is the day, once you trigger session break, all it will do is just will tell you when the day open and then when it will close down, another day will open. During that day, you want to see the start of the big moves. Okay? Like around the time when the big moves happen, you want to note it with a vertical line. If you do this experiment for like a 1 month data, you would notice something that is so consistent about price, that price only move during inside Q zone. That is inside Q zone. That's when the big move always happen. And then for London, we have the Q zone around 8 a.m. to 11 a.m. And then for New York, we have the Q zone around 1 p.m. to what? 4 p.m. Do you get? But now that we have daylight saving around winter time, before we go inside spring by February or January, like there is daylight saving. And then New York will always start from 2. But that's just an exception of the time where you shift your focus until 2 p.m. But normally during the year, we should have our New York starts from 1 p.m. Okay. So basically, that's all about time. So by tomorrow, I'm going to talk to you guys I'm going to tell you guys more about discount and premium. That's another thing that I want to add to time. Discount and premium. Then I'm just going to be building up on your knowledge. I'm going to talk about the discount, and then I'm going to talk about premium, and then I'm going to talk about equilibrium tomorrow. But basically, I hope you guys understand everything about timing that I just mentioned. And then you guys understand your assignment. Your assignment is actually to go back in charts. Let me show you some example. You go back in charts. This is how you do the assignment. Go back in charts. Okay. Choose any chart, any currency pair that you like. But note that for some currency pair, like GBP, they have their own special Q zone because they are Asian pair. Okay. So, but basically, let's choose Euro USD. Euro USD is a London session pair. So now what you do is that, can you see this day starts here and then ended here? This particular day, what you want to do for me right now is just take a vertical line, and then can you see that this big move started when? At what? 8 a.m. Let me make it bigger. Let me make it bigger. Can you see? 8 a.m., which is London open. That means if you are taking a trade there, you don't take a trade before this time. You wait for London open before you actually follow price. Can you see that another swing guide that happened before when market start correcting around 11, those times that I told you I don't trade? When market start correcting again, do you get what I'm trying to say? Into this breaker area, like around this area, market got there around the New York Q zone. And what is the New York Q zone? We have it around, it starts from 1 p.m., 2 p.m. right now because of the daylight saving. But basically, it's still within the Q zone, 2:30. Do you guys understand? Then just do like 5 examples for me. Like this particular day, can you see? The day opens here, closes here, another week started. Can you see I wouldn't take any trade around this time? I'll wait for 8 a.m. before I can actually pull the trigger on any trade. Can you see that this particular move, if let's assume my new market was going to sell, and then timing is my only conference. That is the only thing I consider. Now, by 8 a.m., let's assume that I know the market was going to sell that day. By 8 a.m., I press sell immediately without considering any other thing. By 8 a.m., can you see the timing here? 8 a.m. at this candle, I press sell. Would I be in any drawdown? Would I make profit or not that day? Can you see it? SK?
Yeah.
Like, let's assume timing is the only thing that I'm considering. Like, I'm still going to add to hit, but basically, I'm just talking about time, basically. Like 8 a.m., I just press sell. Would I make profits? I wouldn't really be in any drawdown. Like 8 a.m., I press sell. Because I know markets will start pricing, like the algorithm will kick in by this time of the day, it starts. The only confirmation I'm using is time. And then I use it, let me use 15p per sell. I won't really have any drawdown. Do you get? Even if I use 5p per sell, but let's use 15p per sell. And then let's say I'll take profit at, New York close, like the close of the Qzone or before New York session, because sometimes we can have New York reverse at that. London will go and then New York will reverse it. Let's say I close around this place. Let me see the profit I'm going to make. I'm going to make 30p profit. 30p. All right. Now, let's go to the next day. Again, the next day, let's assume I want to follow structure. I knew market was going to sell. Anyways, then I'm still maintaining my 15p per sell. And then by 8 a.m., do you get? By 8 a.m. again that day, I'm pressing sell with the SL, like right here. 15p per sell, 15p per share. I would only have small drawdown to like 10p per sell. The market reversed. It won't hit stop loss because it knows something big that, okay, market tends to reverse around this time. It tends to start moving around this time, which means there was no confirmation for this one. But after this swing high formed, can you see this swing high? I can actually wait for New York session open. Let's assume I didn't trade London session, and then by 1 p.m., by 2 p.m., which was the New York open because of daylight saving, 2 p.m., I click on sell. I wouldn't have any drawdown. Do you get? It will just enter profits, which means sometimes when you are trying to enter price and you are entering at some particular point, you are just trying to form on, probably thinking, no, there are sometimes you actually wait for before you can actually start trading. Can you see what I'm saying? By 1 p.m., market, I just press sell. I wouldn't be any drawdown. Market started pricing now. Do you get? Now, let's go to this particular day. Look at this day. Imagine you've been trying to sell around Asian session, which I don't trade anyways. I didn't wait. Then by 8 a.m., imagine a new price was going to, like, this move is too big. But even if this move is too big, look at this particular candle. They are formed around 8 a.m. Can you see the bearish starts that form around 8 a.m.? Do you get? And even this reversal started within the Q zone. And the market didn't do anything again until this particular Q zone, that is New York Q zone. Do you get? Just note all the time that market started moving well. Like, look at this day. The high of the day, the low of the day is here. The high of the day is here. So everything during this Q zone, nothing really happened during London, but something happened during the high of the day formed when around 3 o'clock, which is still within the Q zone. So all you do is just take the assignments and then that horizontal line, just put it on that candle of that swing. Then look at this particular day. This particular day, nothing happened during Asia. And then by London open, that is by London open, which is 8 o'clock, market started pricing up. And market never broke it again. By New York, nothing happened again. Then by New York, which is this particular area, market started pricing up. I'm just trying to open your eyes that there's some time of the day that market actually starts moving. So that's the basis of the assignment. So just put a line on that particular swing, then note the time. And then what you want to do is just, there will be some common time around, something common about all the time. you would see that every of the time that all these big moves happen, it will form around the kill zone. Do you understand? It will always fall around the kill zone. So do you have any question before I end the meeting?